Good afternoon, everybody. I think I can see some people's faces. Nice faces. Good afternoon. Good afternoon. Good afternoon. Everybody. Right. Meeting you guys well. Hello. Good afternoon. Can I hear some good afternoon, some greetings?
Good afternoon, sir.
Good afternoon. Yes.
Good afternoon, sir.
Yes.
Good afternoon.
Good afternoon, sir.
Okay, so the voice is clear enough.
Yeah.
All right.
Correct.
I'm going to mute all, and of course, I will just wait for like maybe 5-10 minutes for more people to join us. And of course, I will start.
Are they clash?
Okay. So the idea is simple. We're going to be looking at. I'm still hearing some interference. Okay, I think it's good enough. All right, so if you guys can still hear me, I don't know.
Yes. Well, the network is shaky.
Yes, the network is not too solid, but we're working on it. We're working on the network thing. I think it should be better now. So if it is better, just indicate that the network is better, and then I can proceed. Maybe just give me a message, and of course, yes, I think I've moved everybody. Okay, all right, so we are good to go. Now, we have quite a number in the house already. We have more than 54 people. That means we can start. Now, what we're going to be looking at today is a little bit of advanced way of doing things, okay, with moving averages. And of course, we'll still, here and there, look at some other strategies that we can also add to this, okay, so that we can make a better, or can I say, informed decision before we, jump into a trade in the market. As well, we're going to be looking at how to also, use a little bit of multi-time frames to actually, do some things in the market, a better way. Now, since this is across Nigeria, I think we have people in Abuja, people in Port Harcourt, people in Ibadan, people in Abeokuta, people in Enugu, okay, people in Asaba, wherever you are, you guys are welcome. All right, so it means that the reason I'm doing this is because it is possible that maybe some of you would have seen what I'm about to show you, especially if you're in Lagos, okay, possibly. But of course, learning is infinite. You can't finish it all, you can't know it all. But if you're in Port Harcourt and you have not been able to, maybe benefit from this kind of strategy, or maybe you're in Abuja, you have not seen this strategy before, just patient. Even if you're in Lagos, it's okay. Relax. Of course, new things will always happen, okay, on the chart. And of course, like you all know, this market is a very wide market. There's no clear-cut strategy that that you can say is cast in stone. Okay, everybody come with strategies every day, and of course, we improve every day. That said, let me just quickly move on to my chart, because this is going to be an advanced class. There's no need to talk about stories. Let's learn new strategies that we can use to make money. Okay, so I'm going to switch straight to my chart now. Of course, currently I'm on where is here? I think this is a USD card. All right. So I'm going to disable this, and of course I'm going to go straight to one of my templates. I actually call this card bar. Check it out. Can you see the screen now? Okay. Wait. Give me a moment. Let me just quickly go ahead and share new screen. That's going to be empty for this one, so that everybody can see it. Okay. I think it's better now. You can see my screen. I'm on USD card. Can you see my screen? If you can see my screen, just raise hand. Just raise hand. You can see my screen, raise hand. Yeah. All right. So thank you, guys. Let me just quickly jump into the strategy itself. So I'm going to go straight to templates. Now, watch this. I already have this template and I gave it a name. All right. I think I gave it, give me a second. Oh, sorry. Hold on. I think I made a little bit of error there. I'm going to go back here and share new screen. Share. Okay, so can you see my screen now? Please, if you can see my screen, just indicate, say yes or something. No need to raise hand. Just type yes. I'll read it. If you can see my screen, just type yes. I want to see if I can read that. I made a little bit of error there. Okay, hello. Can you see my screen? Message. Yes, okay. So a lot of people can see my screen. That's good. Now, what I'm going to do is I'm going to go to templates right here. Actually, name this strategy I want to teach you guys. I actually name it Scalper, but you can give it a name you want. Okay, this is template. This is the template I give it. This is the way the template looks like. But we're going to do it together. All right. I'm going to allow you to, because people use phone. I know people use what do you call it now? People use laptop. I know. Okay, whatever you use, whether it's phone or laptop, let's do this together, all of us. So we're going to do something. I'm going to go to template and give you the default template, which is this one. So all of us should go on this, right? No indicator, nothing on your chart. No arrow, nothing. Do that. And of course, we're going to go so quickly double to your laptop, or if you are writing something down, which is okay. So the first thing you need to know is that you go on the free template like the one you are seeing on the screen. Okay, nothing is touching it, nothing is painting it, nothing. Now, the second thing you're going to do is to insert moving average on your chart. And the moving average you want to do is that, like I always say, there are two ways or many ways you can insert moving average. The shortest cut is to go here on your laptop. Of course, you can click here, you can pick trend and pick average. That's moving average. That's one way. Now, the other way you can also use to insert moving average on your laptop is to go to insert indicator. And of course, you go under trend, and of course, you pick the moving average you want. Now, if it is phone you are using, what you do is you tap your screen once. That's the screen where you are viewing chart. When you're on chart view, you tap the screen once. There will be this kind of blue circle that will come on your screen. You click on F. There's an F there for function, and of course, you can. When you get to that part, you go to normally you see averages or trend, okay, under indicator. And of course, if you don't have moving average, you can add it. If you have it already, you should have, because we're going to use 2 this time around. So the first one we're going to use this time around is 50. So I will go with 50 here on that period. I'll just type 50. And the method we're going to be using is not simple. Don't forget that there is simple methods, there is exponential method, there is smoothed method, and of course, there's a linear weighted method. Now, I don't use the last 2. I hardly use the last 2. Okay, for obvious reasons. It's a little bit, of course, beyond this class, but I go with any of the first 2. But for the purpose of this particular training, we're going with the second one, which is exponential. Now, it is applied to close, right? Because the moving average can apply to anything, open, close, and rest of them, and rest of them. But I normally apply to close. Why? Because you see, when it comes to trading, the most important price that trader is looking for in any candlestick trading or in any price action trading is going to be close price. You need to know that. So, because if a particular price action, say candlestick has not closed or a bar has not closed, you really can't tell what will happen to that candle at the end. Now, we inform or make informed decision based on close price. Now, the color I'm going to adopt for this particular average is going to be red. Okay, I'm going to change this color to red for the course of the class. Now, I'm going to do OK. And of course, that one will be on the chart. The next thing I will do is to also add another moving average. This time around, I'll pick period 200. Now, all these things I'm giving you, they are for purpose. For a purpose. So I'm going to go with color black for this. Of course, I will do OK. Default, kind of something like that. Now, this strategy works best on any time frame, like I said, but the reason I actually name it Scalper is simple. Okay? Because I like using it on maybe 1 minute or 5 minutes chart. But when it comes to trading, I really don't actually subscribe to trading on those lower time frames, except I've been trading for a very long time. And that's the reason why I'm bringing this to you guys, because I know that majority of us here listening to me now have been trading for quite a while. Okay, so you are already familiar with the candlestick structures of the chart. You're already familiar with the way price moves on the chart. Price is really, really erratic on the price. Sorry, on the chart. Price is never stable. Price moves wherever it wants to move. So if you go to lower time frame, say M1, okay, you're going to see some things on the screen now, like you can see there. Or we go to lower time frames like M5. Okay, so that's also another very good time frame that you can also use with this strategy, right? So I'm going to do this, and of course, I'm going to show you some things. Now, you are not looking for, if you're going to use this on lower time frames, you cannot target big lots, or sorry, pips. You can't target, say, for example, looking for 30, 40 pips. It doesn't work with lower time frames. Maybe if you're doing it on 1 hour, maybe you can look for maybe 10, 20, 30 pips. If you're going to be using lower time frame like 1 minute or 5 minutes, you should be using, say, 5, 10 pips max, because you're going to be scalping a lot. That's the essence of this strategy. Now, before I go on, I want to show you something, guys. Let me go to, say, for example, D30, for example. Let's go to D30. Now, I have a trade on D30 now because I'm not the one trading it. I have some strategies I'm currently testing that is automated, that is trading this. So if you see a trade on my screen, don't worry, it's just normal. Okay, and of course, it's running on its own. So just ignore or do as if there's no trade on the chart, or just view it as if there's no trade on the chart. So I'm going to apply the same strategy. Now, if you're using laptop, you should have saved that strategy I just showed you now. I expect you guys to have saved it if you're using laptop, right? What I'm saying is this, because of the internet stuff, if you're using laptop, if you're a laptop user, I expect you to have saved the strategy I just showed you now. Like I said before, I saved mine as scalper. So you could use a name, any name you want. For example, since you have the 2 moving averages on your chart, if you're using phone, the thing will stay. Once you insert those 2 moving averages on your screen on phone, even if you switch to another maybe instrument, say for example, you move from USD card to Euro USD, the indicators will stick to your screen. It won't go, right? It won't just disappear. But if you're using laptop, once you switch your screen, you will need to have to kind of, also apply the template to what you want to do. And that's why you need to save it. Okay? You can save it with any name you want, right? Say, for example, you want to save it maybe moving average cross, anything you want, okay? Or maybe a particular strategy. Say, for example, if your name is John, you can just type John, maybe in capital letter, John A, moving average strategy, right? You can do that. It's okay to do, okay? And of course, you can also maybe call it the kind of name I just called my scalper, right? Because the essence of it is just scalp a little bit of pips and move on. It's a little bit advanced and it's very fast with this strategy. And let me do cancel and do something for you guys. If I go to lower time frame, say M5, for example, and I apply the same strategy on it, see what I'm about to show you now. Now, anytime the price crosses, what we're going to do is maybe you have a pen there, you can write and follow me. The idea is simple. You want to capture price based on trend. One thing you can also do is to first of all check, for example, H1, okay, and check if, because you can also use a multi-time frame. If the red moving average, which is the fast, we can call it fast now. Maybe I can label it so that you guys can see it. So I can call this fast. Say type fast, right? Fast, and I do okay. That's the fast moving average, and I do this one slow, right? I can do that. I just change the text and change this one to slow. And of course, I can also change the color. That's how to write on your screen, guys. If you're using laptop, using anything, you can, do whatever you want. Let me just use the color black for that. Slow. All right. So we have the fast above the slow moving average. Now, don't forget that the fast is 50 period. I can also adjust that for. I know maybe some people are just joining us now, right? Okay. So when I actually started this strategy, I was about maybe 50 people on board. Okay, so I actually told you guys some things, but if you're just joining us now, it's okay. What we're going to learn is how to actually use these 2 moving averages you see on the screen to scalp the market and make money. Okay, you want to make money very fast. This is a way to go. Now you can also change the text like so. That's how you change the text on your screen. So I can also say at 50. That's to show you that that's actually a 50 period moving average. And of course, the second one we can also change, say at 200. Actually, just showing you how to just write on your screen. That's to tell you that I'm on 200 period moving average. Okay, so the first one is 50, second one is 200. Or if you don't want to use fast, or if you want to write anything on your screen, you just delete. You don't really need it. Really, you don't need it. All right. So what I'm trying to say is that you first of all check H1 time frame. Pay attention now. And if the fast moving average is above the slow moving average on the H1 time frame, that's cool. You can now know that gives you an idea of okay, what the price is about to do, or that the price is potentially will move up. Now, you may not want to trade on 1 hour time frame because it takes time for the price to retrace and give you what you want. So you can go to lower time frame, say M1 or M5, anyone is fine, or even M15 if you want to kind of say, okay, let me just be patient and all that. So, for example, let's test M15. Now, you know that since the price is above since the price is currently above the slope, okay, on the H1, is that price will go up. All right. So what you now do is you go to M15 and wait for the price to do mistake. Let's do something. Let's go to the 1st of April on H1. Guys, watch this. I'm going to a little bit of squeeze and zoom out. Zoom out, zoom in, zoom out should do that. Now I'm going to adjust it a little bit. I want to go to the 1st of April so that we can show you how price go. There's no need to go to 1st of April. Let's go to this part where the price cross above the slow, when the fast moving average crosses above the slow moving average. Something around this level. I want to show you something very fast. And of course, from that level, if I hit that part, hope you guys will be able to see my screen after I do this. Just want to be sure you guys are on the same page with me. If I paint this part, for example, I just want to show you the potential of this strategy. And I go to M15, for example, and I shift back in history to actually go back to that part where I painted. Oh no, not February. Obviously not February. Can I adjust this chart? Give me a second. Okay, maybe I can just do this. Actually want to adjust the chart to show us where I actually painted on the chart. Let me just go back in history and check if I can capture that part. Okay, so I think it's somewhere around here on 50 minutes. Now, don't forget that this painted part, I would actually painted it on 1 hour, right? You guys remember that. So if I zoom in a little bit now, to actually see what happened on 50 minutes, like so. So if I go here, zoom in a little bit. Good. So on the 1 hour, we actually have this moving average crossed here. If I can just a little bit to that level. So the moving average actually crossed there. Now the idea is this: you're going to wait on the 50 minutes for the price to come back for 50 minutes. Now, what happened is on the 1 hour chart, the price actually crossed above the fast moving average crossed above the slow moving average at that place, that's at that landmark. That's this one right there, where I put this vertical line. That was where it crossed on 1 hour. Now, what I did was I now came back to 15 minutes to check what happened. So from what I can see, I discovered that the price actually crossed above the 15 minute time frame earlier on, and that's around here. Let me show you that. That's around here. Okay. So the price, that was the area where the price crossed above. That's where the fast moving average crossed above the slow moving average on the 15 minutes, which was quite behind, which is okay. Now that becomes tense, but the present tense is that the price is actually at this level, excuse me, of 1 hour. That's 1 hour. That one happened on 1 hour. And of course, at that level, price actually came for, that's on the second arrow now, price retraced. And so at that level, price retraced and came back for the moving average. That's the fast moving average. And of course, it returned with a reversal candle. Why did this thing just jump? Right. So let me just go back a little bit. I just actually wanted to show you a clearer picture, a closer view of those price actions around that level. Okay. The moment, we're almost there. Almost there. We should be there now. Yeah. So price came back for the moving average here and returned with a bullish candle. Now, this is what you guys will look for. This is what you should look for. Let me bring it closer. The shape, same rectangle, and picture this. Right. So the red candles, the red candlestick you see here, the first one there, was the first one after the initial cross on 1 hour, was the first one that returned to the 50-period moving average. And after that, it returned with a bullish candle, more like a bullish engulfing. That's your signal to buy. So if you buy here, since you are trading a lower time frame, you can get, say, for example, 10 pips. Now, 10 pips on 30 gives you about, if you are using 0.01, gives you about 1,200 naira. If you're using 0.1, it gives you about 12,000 naira or 12,200. Or no, sorry, 1,200, yeah, 12,000 thereabouts. And if you are using 1 standard, that gives you about 22,000. That's 1 pip. Sorry, 10 pips. Oh, sorry. 1,200, 11,000 something, and 100 and something thousand. Yeah. So if you're trading 10 pips on Euro USD, now 10 pips on Euro USD from this point, if you place a trade buy, your 10 pips actually closed here. That's about 19 pips also. So days on 15 minutes time frame, you should be able to target like maybe 20 pips, 10, 20, 30 pips. So if it is 20 pips, you're targeting this about 20 pips on 30. That's just one candle returns this money to you. Now, the idea is this: if you are doing 0.01, 20 pips will give you about 2,000. Let's picture it 2,400. 20 pips. Now, it means that on 0.1, that's about 20. Say 22,000 something, and on one side that's about 200 and something thousand. So it means that if you're trading 15 minutes candlestick on D30, you don't really need to wait for long. Maybe a candle, 2 candles, you close the trade, collect 100,000 and move on. But if you're greedy, like some people, naturally they want more money, you can wait, you can get big. For example, something like this. This returns about 9 or something pips. That's this move now on one standard lot. We give you about 2 million from here, right, to this place. We give you about 2 million, thereabout, plus or minus, one standard lot, right, on one standard lot. Now the thing is this: if you are trading smaller lot, it gives you an idea. Sorry, actually had to do some things and now I'm back. Now, hope you guys are listening. If I put this cursor here and I put the buy here and I target, say, 20 pips, this returns, no, let's go with 10 pips. Now 10 pips returns this, something like this, 10 pips. On 0.01, I was trying to tell you that 0.01 will give you about, I know it's about 1,200. We can try it now. No, I think I've checked it on 0.01. Now, it depends on how much you have. If you have all this 100,000 and below, you should go with 0.01. It's fine. If you have all these 200,000 and below, you can go with 0.02 or something on this particular instrument, 30. But if you have all this 1 million and so on, you can start, even if you don't want to start big, you can start with 0.1. Or if your mind can carry it, you can even go with 1 standard lot. Now, I find out that this is the way things move around, and of course you can really pick some tips there. Now that's for a buy. Now if you want to go with 0. If you want to go with what do you call it now? If you want to go with 1 minute time frame, say M1, let me clear the screen and apply the template afresh. What you can also do is, since you know that on the 1 hour time frame the price is actually trending up, okay, so you can do this also. Let's go to the beginning of this particular 1 minute time frame. Now, once the moving average crosses here for 1 minute, we want to scalp it 1 minute now. Let me use an arrow to indicate this. say the arrow crossed here. Sorry, yeah, the moving average is crossed right here. So, and when the moving average crossed right here, you saw the price above both the fast and the slow moving average. Now you're not going to do anything. If you're going to be scalping on 1 minute, you're not going to do anything. You're not going to say buy or sell. You're going to just wait for the price to do what it wants to do. You're waiting for the doomsday when the price will return to either the first or the second moving average. That means either the fast or the slow moving average. So you go to the front and wait. And of course, since that's crossed above, this is the first time the price will return to the moving average right here. This is the first candle that returns to the moving average. That's this particular one I'm going to put arrow on. Pay attention now. So this is the first time the price will return to the moving average. Now the second, after that return, the price returned, and at that level you're not going to place a buy yet. You're going to wait for the next candle to do what it wants to do and show you a reaction, because since it's going to be a buy, you must have a return candle that will turn green before you can place a buy. And fortunately for you, or fortunately at this particular level, the price returned here. That's immediately with a bullish candle. So this is where you enter a buy. Now, if I enter a buy here, right here, say after this candle close, guys, that's close. If I place a buy right there, and your stop loss, if you place a buy, your stop loss should be below the candle. Okay? Ideally, because you are scalping 1 minute, you can't go above this. If you just put it maybe around there, and of course, you just target 10 pips. 10 pips only, because you're using 1 minute time frame. 10 pips only. Okay, so you can just, if I pick, once this thing returns 100 points, that's 10 pips. So this one returns about 120 tons, 113 pips. 113 points, that's about 13 pips. So if you target 10 pips, it means you would have made 1,200 around there. 1,200 for one standard lot, for 0.1, that's 11,200. And of course, for one standard lot, that's about 112,000, thereabout. Okay, so 112,000, close your trade, and you wait for the next signal. Now, the next signal is if the price cross below. It can't be when it cross above. Now, it means that that's the only, and of course, don't forget that that's the only trade you can place at that particular level. You can't place 2 trades. You can only place 1. You can't do the second turn. What I mean is that this is a wrong turn. Let me use it. Let me use this to back it. Because you could also say about the price return to the moving average around there. No, that's a very bad one. That's not a good one. The first one is the one you follow. You don't follow the second one. And now the price also returned to the bigger moving average, which is the 200 period moving average there. Okay, so if you ask me, can you still place the trade if it returns green? Well, I don't do it, but of course, obviously here you can actually turn back, and of course it's going up. So it's also good. I won't trade it, but if you want, you can also trade there. But for me, I don't do that. I just can completely ignore. I only take the first one I return. But it's also a very good signal. It means that if you take a trade here and you also target, because you have 1 minute time frame, and when it's not that green candle, you also place a trade maybe here. Return trade candle on this particular one. So if you place a buy there, you also target like 10 pips that same day. Of course, you also make it, and of course, you also move on. This is about 10 pips for you. Okay. Though the price actually move like so, it moves even large and volatile, but it's okay. Just target 10 pips because you are trading 1 minute time frame. Now, if you're going to do it on 5 minutes, the same principle. Now, let me tell you the drawdown of this. Don't forget, I'm still doing buy. I'll still show you how to do the sell. Now, if you're going to do let me tell you the drawdowns. What you should not do if this thing happened like this and that and like that is that if the price didn't stop on the first one, I want to show you a particular example, or maybe a classical example of this. Let me go with this and go back in history. I want to show you something very fast. Okay. Now, let me go back in history. If I can show you something very fast, that's in a place where it actually didn't work. Okay, I've not seen one. I've seen positive sign. Okay, let's example. Yeah, this is a very good one. Now, let's us assume that this is where the price crossed. This is not true. It's not really true. No, I don't want to use this example. I want to use a very clear example where it actually crossed. Okay. All these ones are very good examples of a buy signal, but I'm looking for a fake out that you should avoid. difficult to avoid, difficult to avoid, difficult to avoid. I've not seen, all these ones I've been seeing are very good signals. But let's assume that this is a cross. Okay, I think this is a very good one. Now, check this out. Price crossed here, crossed above here, right? Crossed above. So after that cross above, the first price that returned to the moving average was this one, I think, this one. All right. And of course, the next candlestick returns a doji right there. Doji right there. All right. So so if you place a buy and you target 10 pips and you target maybe 5 pips stop loss or something, only your stop loss should be your profit should be double your stop loss. So if you put a 5 pip stop loss, you should put 10 pips take profit because you have to target double for this particular strategy. Or you can even target 1.5 or even 2. Okay, so it means that if you're using 10 pip stop loss, you should use 20 pips take profit. So for example, for somebody that use 10 pip stop loss or even 5 pips, let's say this way you place a buy, for example, and you target say 5 pips stop loss. Let's check if this one is up to 5 pips. I want to check something very fast. It's about 50 points. It should be more. Okay, this is about 40, right? So let's go a little bit now to 50. I want to see if we can capture. I've seen some flaws in this, so I want to show you why you should not take some trades in some instances. Let's say I check this out again. It's up to 50 points. 50 points stop loss. Good. So that's 50 points stop loss. So you place a buy where that arrow is, and the price went against you. And what you're going to check out is the number of candles that will close below the 200 period moving average. The rule is simple. You cannot have more than, once you have more than 3 candlestick close below the 200 period moving average, it means that that strategy is bad. It means that that trade may not return to profit. But you have a stop loss that will guide you, so you stick with the stop loss. In this instance, you would have stick with the stop loss, even though the trade eventually returns to profit. But I'm telling you that anytime you have more than 3 candlesticks close below the 50 period moving average, then you shouldn't be trade. Okay, so this one still returned about 10 pips, which is okay. It's still profitable, but anytime be watching out for these candles that will close below the 200 period, not necessarily the 50. We don't care about the 50 period. We care about the 200 because that's the signal you'll be following. That's the strategy you'll be following. That's the trend determinant. Anytime price close more than 3 times below the 200 period moving average, please don't take the trade. Ignore it and of course move on. Now let's really go with the sell. Let me see if I can just return to sell. Now for a sell, you are going to be placing a sell when the price, or when the fast cross below the slow. I want to show you some examples if I can see here. Okay, that's the first one. Now fast cross below the slow moving average, slow period moving average here. And the first candle that will approach the moving average is this one, this green one. And of course, the first candle that will close below it, that's below the 50, is the red one. So you're going to place the sell immediately. You don't need to wait for anybody. So if you place a sell here, for example, and you target, you just use 5 pip stop loss. 5 pip stop loss would be, this one is already 7 pip, but you can't go below the candle. So you have to go maybe above it, something like this. That's about 9, let's even say you 10 pip stop loss. So this, and you're also targeting maybe 20 pips. This one did not give you profit at all. Okay, you can see that this one is a loss. But the stop loss will save you. The stop loss will save you the embarrassment here. That's why it is important for you to use stop loss. So this one is a loss trade for a sell. Now, once that one missed it, of course, don't forget that eventually you're going to have to turn back to the buy pressure here, and of course you're going to make the money back at that level. But check this out. Let's see if there are some examples that actually went with sell. Okay, let's take this one. So price returned to the when the moving average crossed below here, price returned back to the 50 period. That's the 200 period. Now, not just the 50, it actually broke the 50, broke the 200 and closed above it. So that's the first close above. And of course, the next candlestick actually trade below the 50. So if you also sell here now, for example, if you sell and you target like this should be your stop loss. Now, if you sell here, you should use this higher as a stop loss. That's about 7 pips, about 7-8 pips. And of course, you target like maybe 10-20 pips. This one did not even return the profit for you. So it means that basically the 30 is actually very strong in uptrend. It means that even on 1 hour, then you would have seen that the price is actually trading bullish, meaning that it will be good to be selling. All right. So you can also use the filter. One of the filters I normally use is if the price is above the if the fast moving average is above the slow moving average on H1, it means that even if I go on M1, I'll be looking to buy. If the fast moving average is below the slow moving average on H1, if I go to M1, I'll be looking to sell. Hope that one is clear enough. Both on M5 and M1 and M15. That's an idea to use to capture the market. What I'm trying to say, guys, is that if once you check the H1 at any point in time, and you see, like we are seeing now, that the price is actually the fast moving average is above the slow. Then once you go to M1, 15, 5, you should be looking to buy at that instance because the price is currently uptrend. Shouldn't go against the trend. Now, based on that, let's go to Euro USD and check something out. If you can see some trades you can pick on Euro USD. Let's go to here and pick here and go to Euro USD and apply the same template on Euro USD. Now, the trend is up, right? Obviously. So the price is actually the fast moving average is above the slow moving average. It means that if we go to M5, M15, or M1, anyone we choose to trade, we should be looking to buy. And we only buy when the price, when the fast moving average on this time frame is above the slow moving average on this time frame. So in this instance now, we can see that the price is actually above the slow moving average on this particular one. So we can place it back. That's what it means. As simple as that. But I think we should be able to place it back because there's a cross now. So we now place a new order and simple. Boom. That's it. So now that we have bought, next thing is to put stop loss on our price. The stop loss for this particular trade should be ideally should be around maybe 10 pips. There's about 8.5. 8.5 is fine. Pips for that. And of course, we can target maybe 16 pips take profit. There about. So let's see if I can zoom in and actually adjust the profit. Okay, so I can just adjust it to about maybe it's about 8 pips. Now that's about 10 pips already. That's how we do it. So that's how to actually capture the market and make money. Fast scalping, I call it. Fast scalping strategy. So you can use this to be making cool money. Whatever you want to trade, whether it's indices, it's oil, it's anything, I'm using this idea to be, making money as we move on. That's the first strategy I'll talk about. Let's see if I can look for another one. Say, I want to see the sell one because we have seen enough example on buy. Let's see if we can pick some examples on sell. Let's check this one if we have anything to work with here. Say, for example, I have this on USDJPY, and at the moment the price is the fast moving average is below the slow moving average. If I go to M5, M15, M1, any one I choose, okay, among the three, and I see a signal to sell, I would say, for example, on this M5 now, the signal is a buy, so I won't buy because I'll be doing this trend. Let's check M1 if you can see something to work with. Now on the M1 also, the fast moving average is still above the slow. It means that I still can't buy and I still can't sell because I need this to return to sell mode. Then I'll place a sell. And of course, if I check M15, is there anything we can work with? Yes, I think M15 is good enough. So, but unfortunately, we already have instances of more than 1, 2, 3 close. But it's actually returning after this test. It's actually returning, in green light now. We should just pick a sell with this one. Okay, just pick a sell. Sell we do. Right. So that we are sold now. The next thing is to first of all appoint our stop loss, which could be around 12 pips, 13, 14, 15 pips. That's about 15 pips stop loss. Right. And of course, we do the profit, which will be about 30 pips. Depends on how the thing returns. But of course, even if we don't catch 30 pips, if we're able to catch it maybe 10, 20, 30, 20, 25, we okay, that's about 18, 19, 20 pips. Right. Profit. Now, with that, we have guide our trades, take profit, stop loss, everything set. It means you can move on to other things. Say, for example, you want to test maybe US 30, US 100, anything, this strategy works perfectly fine on anyone, right? So let's see if we can check gold. Let me check gold with this strategy, precious metal gold, and check what's going on gold. Currently, we can see that the price is currently volatile to the upside, but that means even if we check with this strategy, the fast should be above the slow, obviously. All right, fast above the slow. Now, what we can do is to keep on checking 15 minutes, 5 minutes, and 1 minute for opportunities to buy. Excuse me. Okay, so the price is returning down on 1 minute. It means that we still can't sell, okay, because we're going against trend if we do that. All right, so let's check from the instance on this particular 1 minute. For example, let me see if we can check this out. Okay, so you can see, for example, here that because we're on buy mode, that's on the buy signal of 1 hour, and we come to M1 and sky, it means that, well, for example, in this instance, we would have picked a buy. That's a very good signal. Though it's fast, but it's a very good signal. So you buy at this arrow, that's when the price returns green here. You place a buy, and of course, you enjoy your money. That's how to actually use this to scalp the market and make money. So, for example, if you are bought here now on gold, it's today or not even yesterday, today is 16th, you would have made it's more than 50 pips, it's more than 100 pips, almost 100 pips move today on gold. That's how though you missed it, it's fine. It's fine. Another opportunity will come. Don't worry. Of course, that's how to scalp the market. Now, if you have any questions, just ask me now. Let's look at it. Questions. First question is from Emmanuel Nagy. For those of us using phone, what should be the period for the fast and slow? I think I've mentioned it more than several times. The fast is 50, the slow is 200. Please, what is your advice on gold at the 1 month interval? 1 month time frame, you mean? I can check. Let's quickly go to men and check what gold is doing. Gold is still currently bullish on 1 month, right, on the monthly chart. But I think whether you like it or not, gold is still fall. I'll tell you the reason why. And if the price is currently too far from the slow moving average over here, what I mean is that the distance is large. If you check where the price is now, compared to where the 200 period moving average is, it's more than maybe 5,000 pips. It's more than 5,000 pips, although it's about 6,000 pips. That's a large difference. Now the price will relocate or adjust itself to come either close to the 50 or the 200. So I think the price will still fall over time. But what I can do is, if I were you, I would naturally, go to my support and resistance template and check something out. On the support and resistance mode, I see the price leaving weak, and of course on the weekly, let's check if it's returning to okay. So even if the price is going up now, the worst it can do is to go back to this level and stop this level. All right, so I can just give you that level. So the price will return to that level most likely, but it will still go down. Don't forget that the price is never gonna move in a straight line. Even though it's gonna go down, it won't just move down just like that. So it might take this weak resistance level. Eventually, it will still fall on the weekly chart. And of course, on the daily chart also, we also see the price, okay, actually, turning around and attempting to break it, unquote, with a very strong bullish engulfing. And that's a very good one. That's a very good signal for price right there, telling us that the price will still push up, which is okay. Allow it to push up, but the direction naturally is down, right? So allow it to push up, enjoy the move now. And of course, capture the money as going up. Where is it going to stop as going up now? It's going to stop maybe around this zone. Let me just use this insert shape. This will be the first stop sign, first stop, right? As the first stop area. So as it's going up now, that's where it's most likely going to stop, but on the higher time frame. So let's quickly go to the second strategy I want to show you guys today. It's going to be, let me check my template and see if I can just give you another one. Okay, so how you can also use multi-time frame on let's see if I can just show you that how you can use multi-time frame on this particular strategy. I know you guys have enough of this, but have you been using it properly? Have you been using it properly? I don't know. But even if you have not been using it properly, what you can do differently, how to now apply this to make money. Actually, I think I did Monday market review on gold, and I told you guys to keep on buying gold, right? I think I mentioned that. I remember. I actually think I mentioned buy on gold on Monday, and of course, since then the price of gold has returned. I know it has returned some profits for you guys. Okay. All right. Okay, so now let me check the messages again. I want to ask, please let me recap when you take buy sell while using this indicator. No audio. Who says no audio? No audio. I think I have enough audio. Please, if you can hear me, just indicate. How many of us can still hear me? If you can hear me, just indicate. Okay, so you can hear me. I actually wanted to address some of the questions people. Okay, thanks. Please advise on oil at the same 1 month. Okay, I will look at that and look at it. So are you saying we can buy? This one is from Steve. So are you saying we can buy when the fast moving average crosses above the slow and bullish candle close below the fast moving average? No. Steve, the question you put here is funny, but I didn't mention that when a bullish candle close below the fast moving average. No. That's not a good one. The bullish candle should close above the fast moving average. Maybe you want to recap your question, or maybe you don't understand. All right. What I'm trying to say is, let me go back to the template and show you what I was showing on D30H1. What I'm trying to say is, Mr. C, is that if you check this out, the first thing you need to look out for is the fast moving average on the 1 hour, either above or below the slow moving average. If the fast moving average is above the slow moving average on the 1 hour chart, then it means that you want to look for a buy on the 1 minute, 5 minutes, and 15 minutes time frame, whichever you choose. Now, if you now move, for example, to 5 minutes time frame and the price returns bullish, like in this instance, the first time it crossed, in this instance, it actually returned bullish here. Let me zoom in. The first time it crossed, the first time the fast moving average crosses above the slow in 15 minutes was here. Let me use this arrow to show you that. Around here. So let me zoom in now so that we can dissect that part very well. Zoom in one more time and adjust so that we can look at it. So check this out. The price after this cross, after this initial cross right here, this is the cross point on the 5 minutes time frame for D30. It actually also happened maybe today or yesterday. I'm not sure. I think yesterday, 15th April. So the price actually crossed there. But you're not going to place a buy at that point. No. You're going to wait for the price to return to the fast or the slow moving average. So in this instance, the price returned to the fast moving average right here. So the first candle that will break it was this one, and the second candle that will break it was that will close below it was that one. But we don't care about how many candles close below the slow. We care about how many candles close above below the fast. We care about how many candles close below the slow. So let me recap. After this return, let me use this arrow. Probably duplicate this arrow to show you what I want to show you guys. Very, very important you understand this. 1, 2, 3, 4. So I have 4 arrows on the screen. 4 arrows on the screen. The first 3 arrows close below the fast moving average. That is the arrow pointing to those price actions, those candlesticks actually close below the fast moving average. But the fourth arrow, okay, the fourth arrow actually pushed up and pushed on the candle, actually close above the fast moving average. So the first candle is the one you buy. Let me show you what I mean. So this is where you place a buy. Place a buy right here. And get, for example, since these are the confluence point where the price close, check this out. If I use this low as my stop loss, this low as my stop loss. Okay, so check the number of pips first. How many pips is that? Let's check that out. It's about 10 pips, right? So it means that because this is 10 pips, it means that I have to target 20 pips, take profit. So the 10 pips take profit, this is about 17 pips, 18, almost 20 pips profit. That's what it means. So it means that when you buy there, the price move 10 pips, by then you should have secured your trade. You should by now, because you're an advanced trader, you should have known how to move your stop loss to break even and enjoy the ride. So the price give you 10 pips here. You say it's not okay, you are targeting 20, which is okay. Let's move up to 14, 15, 16, 17, 18 pips. Okay, unfortunately, it didn't get to 20. But of course, if you are breaking even, you wouldn't lose this trade, obviously. And of course, if you collect your trade midway, maybe when you get 15, 20 pips, you collect your trade, it's okay, move on. Right. So, or if you have been doing 1.5, 1 to 1.5, since the stop loss is 10 pips, you target 15 pips, take profit, at least you would have closed in profit, which is okay. But it's okay to target double. It's okay to target 1.5. All right. So that closing profit for you. Now, what I'm trying to say is that you can see that it was when the candlestick returned bullish and closed above the fast period moving average that we actually buy. This question, this particular explanation is for Steve. Steve, are you there? And just indicate if you are there and you understand what I just wrote. Mr. Odu, if you can't hear the audio, that's unfortunate. You need to really work on your audio so that you can hear me. Very, very important. This class is very important. Okay. All right. So thank you, Steve. I now know that you understand. Now, the instance I was trying to say is that in a case whereby the price actually returned to the slow period moving average and more than 3 times. So what I'm saying is that, Steve, if this incident has happened here, maybe I can print it. Can I use insert shape and print that part? If it had happened to slow period moving average, then you shouldn't have bought. In this instance, when you have 1 candle close, 2 candle close, 3 candle close, if it had happened to this black one, this slow period moving average, please, by all means, do not buy. The 4th candle return and close bullish on this on the slow moving average. So that's the only exception. Otherwise, it's good to still buy on the fast period moving average. Now, I was trying to show you guys how to use this particular indicator now, the hybrid indicator, to actually do multi-time frame. How I use it in advanced ways. I'll first of all check H4, all right? Normal. And of course, you can see that the trend says it's going up on H4, which is okay. So it means that I'll be looking to buy. All right. So this is where the arrow cord right here. The arrow says price wants to go up, and I'm fine with that. Okay. The next thing I want to do is to now go to 15-minute time frame and be looking to buy. So going forward, I will go to insert, and of course I can pin that part just to be sure that I know where I'll be buying from. So from here going forward, I'll be looking to buy. What am I buying? I'll be buying on 15 minutes time frame when an arrow comes up. I'll just be trading arrow. I won't trade candle on this. I'll just be trading arrow only arrow. I won't trade candle for anything. All right. So what I will do is I will just first of all, the first time the arrow returns on 15 minutes was around this period. So if you check this out now, if I highlight this part on the chart, those are your signals to buy. Okay, that's how you do it. You can just highlight this point to tell you that that's a buy signal, a very clear one. This is another buy signal. I won't sell because on the H4, the price says price will be going up. So I'll just also go to, maybe I can just copy this one also. Okay, so I can just copy this. I'll show you another buy signal. That's another buy signal there. That's another buy signal there. That's another buy signal. So I just track this. Hold on. Guys, hold on. Just want to copy this. Right. That's another buy signal there. And that's another buy signal there. So you can see that in all of these 5 buy signals, I would have been profitable, right? No, I won't lose any trade. If you're using multi-time frame to actually place your trade, you'll be at the edge, you'll be at the upper, how do I say it now? You'll be at the advantage to actually take advantage of the market. It means that you won't be seeing all these fake outs. For example, if any of these arrows turns out to be red, I won't follow it. Why? Because on the H4, the price says, I want to go up, I want to go up, I want to go up. Clearly, H4 determines the trend on the chart based on this particular software that you are seeing on the screen. The softwares, and of course, don't forget that the purpose of the software is to actually show you guys how you can actually make money. If you look at what is on the screen, it says Israeli Academy Hybrid Trading Indicator Software for technical analysis only. And of course, when trade when arrow is in sync with the price. All right. So that means when the arrow is in sync with the price, average and MACD divergence. Now, one, use expected stop loss and take profits on all trades. So it means that even if you are using this indicator, it's just an indicator. It's not as if it's not as if it's the one that will place trade for you. To just tell you the most likely price direction on the chart. But the idea is that you want to use the multi-time frame analysis to actually filter out bad trades. There are bad trades on the chart. This indicator will show you both buy and sell, good and bad. Buy trade, sell trade. It's left for you to now, based on your experience, now be able to decode which of these prices is actually going to give you profit. Not all of them can return profit to you, right? So if you are doing the advanced strategy, then you have to actually learn how to use multi-time frame. Remember, on the H4, on this particular time frame, it's actually a buy at the moment. So it means that you only be buying when the arrow returns a buy. If the arrow returns a sell, you ignore it because the time frame of the H4 says that the price will go up. Now, the same thing would have applied if I go to H4 time frame now and I do something very, very, very surprising. Okay, this has been bullish for a while. Now let's check this out. I also put this part. say I click on insert. Check this out, guys, so that you can be sure of what I'm playing. If I pick this part, rectangle, and from where it returns a red arrow there to where it returns a green arrow there. Hope you can all see the screen clearly. If I change the color of this to, for example, just to be sure of what you are doing, I change the color to this one, right? And I do this. So I want to show you how you can see. Don't forget that this is a green part. The green part I'm showing you on the chart is the sell part. That's where you can trade a sell on 15 minutes. Now you go to 15 minutes time frame on that green part. You can see you can practice anything on the chart only if you know how to do it. So if I go to the 15 minutes time frame now, let me just do this, and so that I can quickly run to the part I'm looking to actually dissect or experiment on. Okay, I'm on 15 minutes and I want to dissect this part. This is the part I want to dissect. All right. So it means that on this green part, if I see a green arrow, I will not buy. But if I see a red arrow, I will sell. Hope you guys are getting the idea. Because on the H4 now, the price wants to go down. On the 15 minutes, I'll be looking to sell. So the first sell I will take will be this one. Let me click on insert and pick shape, and of course pick rectangle and pick this one. Of course, I can duplicate this to anything I want to do. I can also duplicate it to this part. And I can also duplicate it to this part. Sorry, this part. Okay. Now, check this out. If I place a cell here, I also use stop loss. Okay. So if I place a cell here, I'll use stop loss. Say, for example, I use this stop loss. Say this is the latest high, and this is the previous high. This is the previous high right there. So that's a latest high. Let me even delete these two lines. I don't really need them. I want to show you something very fast. Okay. Oh, sorry. Anyway, I was actually trying to delete this line and show you something very fast, very fast, very fast. Delete. Okay, so what I'm trying to show you is that there's an arrow that I've put here instead of line, just to show you the highs. So if I pick this cell where this red arrow, the first red arrow is there, and I'll be looking at this part as the last high witnessed on the chart. This is the previous high witnessed on the chart. So those are potential areas where you can put your stop loss. All right. So if you put the first one stop loss, obviously, when you click this cell, this one would have taken you out, right? Obviously, it would have taken you out. So it means that that's a loss trade for the first one. But check the second one out. So if I pick a cell there, obviously, if I pick a cell here, I will also use this one as my stop loss. On the second, I'm talking about the second signal that came on the chart. So if you pick a cell here, this one would have been an ideal zone for your stop loss. So if you pick this cell, and of course, since you have 15 minutes time frame, you shouldn't target big, maybe 10, 20 pips, you move on. This one returns about 72 pips. All right. So it means that you would have been profitable here, obviously. So if you target like 10, 20 pips, you would have closed the trade and move on. Now let's check the third one. On the third one, you would have used this zone as your stop loss. Don't forget, you always look at the highest high. Okay. So if I pick this third one as my sell, and the next signal, if I pick this as my sell, obviously that will be my stop loss. That's quite large, 137 pips, large, right? But if I target 10, 20 pips, 30 pips, it returns about 90 pips, even 100 pips eventually. But even if it is 10, 20, 30, 40, 50 pips that I make, I would have closed my trade and move on. On the fourth one, let's check it out. Don't forget that you will not be buying at this level, you'll be selling only. On the fourth one, if I pick a sell here also, let's check. If I pick a sell here, if I do this sell, let me show you where the stop loss will be on this trade. So if I'm doing this at the fourth or fifth one, the stop loss could be here, right? Or it could be here, be on the last one. Still like the last one because it's still large, all right? So if you pick that, because if you pick this as a stop loss, it's very close to the price, obviously very close. So it's not really ideal, right? So I would have loved the last one, which would be here as my stop loss also. So with that, at least you would have still made about, I don't know, it's about 160 something pips in profit. Check this out. If you miss all those ones, and because the thing is still active there, look at all these ones. All these ones are very good signals that follow on the chart, and of course also make money on both. Now, anytime the price returns green, you do not buy because the price is down on H4. I think I've done justice to this, and I know that since you guys have been trading for a while, you grab. All right, so let me, we have been on 1 hour now. We should close any moment from now. But before we close, I want to ask you guys so that you can talk to me. If you have questions, you can throw it in the house now. I can look at it very fast. How do we get a hybrid indicator? Who is Mr. Charles and where are you? I'm going to give you a link. Let's see if I can just give you a link to this hybrid indicator. I hope you can install indicator on your own. If you can, go to any. No, I don't want to give it to one person. Let's see, everyone in the meeting. So, okay, Mr. Charles, you are in PH. I'm going to give you something tiny url.com/rally CFTP. This link that I'm dropping here is for everybody. And of course, I want you all to copy it and take it to your browser and download the folders in there. All right. So, and of course, you can install the indicator on your own. If you want to learn how to install indicator, go to YouTube. You can just easily install indicator anyhow. Of course, you can call your account manager, they can assist you. Now, Mr. Kelly Cross says it's outside Nigeria. It's okay. The video is going to be available for you. Okay, Mr. Kelly, relax. The video will be available for you. The only thing you need to do is just hold on a little bit, even if it's going to be available today, which I doubt because the marketing manager is not in town. All right, so but he's going to be the one to host the video. All right, and of course, once he hosts the video, just since you are a Rally Trade client, you have access to the videos on our Rally Academy website. Okay, all students have access to that. Now, any other questions? Please, what is the stop loss for USDJPY sell trade? I can't remember, but I think it's a sell trade. And of course, we use about, I think we use about 10 pips or so. So just target 10, 15 pips, all right? Stop loss, Mr. Itoma or Martins, right? Please give the URL again. I just dropped it. Please check through the chat, all right? Gioni F205. Just check the chat. I just dropped a message now. So look through the chat. Look through this general chat. You'll see the link. url.com/rallycftp. All right, thank you very much. Okay, so thank you very much, Mr. For the strategies. Now, there are different strategies you can use to catch fish in the river, rat in the bush. Okay, the same thing. There are different strategies you can use to make money on the chart. The only thing is to now, be patient enough to quickly run through your chart. Will the green sign or red sign be there before going down on the 15 minutes time frame? Of course, yes. Okay, so before you go to 15 minutes time frame, first of all, look at H4. Where is the price going on H4? Follow the price on 15 minutes. You make money. Guaranteed, you make money, sir. And of course, on all trades, I'm insisting for the benefit of everybody, on all trades, use stop loss. Now, I tell you this, you see, stop loss is one of those, overrated or, less look at, particular, what do I say now, indicator on the chart. If you don't use stop loss, there's a potential, there's a likelihood that you can burn your account. I'm telling you this because I've been there, all right? When I was not using stop loss, I wasn't making money. The day I started using stop loss, even though I wasn't really making money, I was actually breaking even. And of course, before you know it, I started improving my strategy, and that gives me a leverage. Okay, stop loss is one leverage that will, guide you, save you against bad trade, because bad trade will happen in this market. There's no clear-cut strategy. There's no guarantee strategy. And I'll say, oh, 100% accurate is not going to fall. So what time frame do we filter this trade with on the scalper strategy? You can use 1 minute, you can use 5 minutes, you can use 15 minutes on that. Okay, please, what is the help of the moving average? What exactly moving average does for the trader? Who is Timothy? I think you are new, you're a newbie, which is okay. I will rather you go to YouTube and look for maybe 1 or 2 videos on moving averages, and of course you understand how that one goes. Please, I need the video. It will be available, Mr. or is it Osulana Johnson? Okay, Felix. How do we combine the MACD with the hybrid indicator? For the purpose of that, if you want to combine the MACD with the hybrid indicator, that's a normal way of doing things. That's a baby way of doing things. Okay, I just taught you an advanced strategy. This class is the advanced class. Okay, if it is the basic class you're looking for, where you can combine MACD with it, it's fine. Where are you depends on where you are. If you're in Lagos, you can just maybe join one of our classes, and of course you can use opportunities to learn how to combine MACD with it. But the strategy I just taught now, actually, do away with MACD. And of course, it's just a pure advanced way of doing things. How many pips of stop loss will you advise we use? Depend on the structure of the chart. For the second strategy I just taught you now, you don't depend on pips, you depend on the structure. All right, please, I need a video. It will be available. Abeokuta, it will be available. Akwa Ibom, it will be available. Okay, do we filter on H1 or H4? I said H4, 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 I insist on H4. Now, do we filter on H1 and H4? Like I think I just answered that question. Now, before you go to M1 or M15 or M5, oh, okay. If it is the moving average you are talking about, yeah, you can do the H1 or H4. Please, the value of moving average. What do you mean value? There's no value of moving average. There's just period of moving average. I use 50 and 200. Is there a physical class in Abeokuta? Yes, this month there will be a physical class, advanced class, I think. But even if it doesn't come, you will still get the basic class when next you come to Abeokuta. But I don't think we'll have Abeokuta structure for this month. But I think it's going to be May. Now, spread is always my enemy in it messes up and trade. Now, let me tell you something, Mr. Patrick. You are your own problem. Okay, on the chart, there are ways you can actually filter out trades that are of higher spread. Let me show you that for the benefit of this particular question by Mr. Patrick. What I do is this: I go to this part. Hope you guys are seeing the screen. I go to right click on my screen. All of you should do this, especially if you're using laptop. You right click on your screen and click on show all. This is very, very important. Now, when you click on show all, you also right click again and you click on spread. Okay, very, very important that you see spread on your screen. Spread, very important. So once you see the spread, whatever you want to trade now, you can see it. Now, for example, on the Euro USD now, the spread here is 17 points. Okay, 17.16 fluctuating. So now tell me something. If I see a Euro USD on the spread of 16 points, that's 1.6 pips. And I see, for example, GBP CHF for 98 points. That's about 9.2 pips. Which one do you think you advise me to take of these two trades? Obviously, Euro USD. Why? Because the spread is cheaper. Now, why will you be trading GBP CHF, for instance, when you know that the spread is higher? I won't trade it. Now, one of my winning strategy, or one of the ways I normally use to actually escape all this nonsense, is to actually select what I want to trade and stick to what I want to trade. Now, I'm going to do something for you guys for the benefit of everybody listening to me. How many people are in the house? We have about 78 now. Do this for me. What I trade on the chart, you can't. The spread cannot be my enemy because I normally trade, low spread instruments. Now, if you are trading currencies, follow me. Euro USD number 1. Hope you are writing. USD JPY always my favorite number 2. Always USD JPY number 2. Euro JPY number 3. Euro pound number 4. I'm going to give you just 6 currencies: Euro USD, USD JPY, Euro JPY, Euro GBP, USD CAD, and AUD USD. Hope you have written those 6. Those are the 6 currencies you can't but see on my screen. I'm familiar with them. I like them. The spread is never my enemy on those ones, and I always make money on those ones. Okay, so but if you are now migrating, for example, you are now saying, okay, you want to trade New Zealand USD, already know that the spread on New Zealand USD is 5.1 pips compared to Euro USD where you have 1.6 pips. So naturally, I won't trade New Zealand USD for anything. Even if you say maybe fundamental news is coming up, oh, I already know where New Zealand USD is going, I would rather trade AUD USD instead of New Zealand USD. Now, based on that, I think I've been able to do justice to spread to Mr. I can't even remember his name. I don't add USD CHF to it. If you want to trade it, the spread is not too big. For Gioni, if I'm saying something, you are saying something else. It's okay. If you want to add USDHF to it, it's fine. USD is not too, the spread is not too big. Now, my question is not related to the strategy just talked about. I would like to know your take on EA expert advisor. I don't mind calling you to get your advice on that. Okay, so it's not a problem. If you want to call me, I want to get information on that, Mr. Ola. I think Mr. Ola was with us on Monday. I think I've not attended to his question. Apologies to that. So, Mr. Ola, I don't know if I can just reply privately. Can I do that? Okay. So direct message to Mr. Ola. I think you have my number already. I think so. So you can just give me a call. I just sent you a message. Okay? I just sent you my phone number. You can just, just send me maybe a kind of WhatsApp message or something, and then we can discuss your questions. So the list of those currencies, if you check the list here, you will see it. That's if you look through the chart. 21 EMA and 50 EMA strategy you shared with us long time ago. That's a different strategy. That's a different strategy. This Kappa strategy is similar to, but it's not the same. Okay, if you're talking about 21 and 50, that's a different ballgame. Not the same. Okay, they're a little bit different. Okay, the 50 and 200 is strictly scalping strategy that you combine with higher time frames or a lower time frame and deliver a very good result on your chart. Appreciate you guys. I'll just open the floor for 1 minute, and of course, I can listen to some voice talk, and of course, we'll end the class right there. So let me just quickly unmute you guys and allow you to unmute yourself. So please check yourself and see if you can hear me now. Okay? So talk to me very fast.
Hello.
Yes, I'm with you.
Hello, sir.
I'm with you.
Hello, sir.
I'm with you, sir.